Hi, welcome to the Mohua Show. My name is Mohua Chinappa and I am an author, entrepreneur, and ex-housewife. This podcast is about everything from business to technology to arts to lifestyle, but done and spoken ईमानदारी से. Hi, in today's episode, we have with us Anupam Gupta. Anupam is a chartered accountant, author, and a podcaster. Anupam has worked for 2 decades as an investment research analyst and as a thematic research consultant in institutional equities with leading brokerages such as CLSA, HDFC Securities, Barclays, and Ambit Capital. In 2020, Anupam, with Saurabh Mukherjee, co-authored the best-selling book, The Victory Project, 6 Steps to Peak Potential. Since 2017, Anupam has been hosting an award-winning personal finance podcast called Paisa Vaisa. So whoever's been following podcasts will know about Paisa Vaisa. But today we're going to talk to him about his book. His new book, The Wisest Owl, Be Your Own Financial Planner, uses the wisdom and experience of India's top personal finance professionals to offer framework to readers such as young investors and my favorite topic, homemakers, as they can use to create wealth in the long run. So, hi, Anupam, in the show. Let's just start with the first question. So, my first question really to you is that look, in India, people have traditionally been focusing on investing in tangible assets. What they understand is real estate and gold. How do you feel that the focus is shifting? Do you think there is a shift in the focus of the present generation? Are they more willing to take more risks?
First of all, Mawa, thank you so much for having me. It's always such good fun to be in a podcast that also such as yours because I really wish that there were more women talking about personal finance, but I'm assuming we'll get to that in this episode. Yes, I mean the answer to your question is yes, that people are shifting towards financial assets from physical assets, and this is something that the RBI in their 2017 report had already highlighted. They said that as per their survey, a lot of Indians would go into retirement with a lot of physical assets like real estate and gold. And some of these would also have a lot of loans on them. Like if they've taken a house, there's a loan that's outstanding on them. And that's not a good place to be in for retirement because at the point of retirement, you would prefer to have income generating assets rather than have to pay off debt and pay off loans. So the RBI has a detailed report about this in 2017, and it is there in the link to the report is there in my book as well. Since 2016, of course, 2014 actually the government has been talking about financial inclusion, which is getting India's vast population to gradually move from physical to financial, from very basic steps like opening a bank account to having really critical products like healthcare, like life insurance. And the government has been doing a lot. And this was already happening for a while. What changed in 2016 was what's called the JAM Trinity, which is, the Janadhar. There is the Aadhaar, there is the mobile, and there is a basic bank account that the government had offered to everybody. So then in 2016, you also had what's called the Geo moment, and a lot of when Geo came in and you had access to cheap internet, India really took off. And today, India is among the highest data consumption country in the world, mobile data. So all of these factors have been happening even pre-COVID. COVID, of course, for whatever reason, pushed everybody towards financial assets. You had that massive boom in the stock markets, not just in India but globally, where a lot of the newer generation, whether you call it Gen Z, Generation Z, those who have been born after the year 2000 and who are about in their early 20s now, a lot of them are now used to a quicker, smoother experience, what's called UX and UI, when it comes to making their investment. So that also has been happening. Fintech, like I've written in the book, has been at the forefront of this revolution. So as you can see, there have been 2 or 3 drivers that have been instrumental in the shift from physical assets to financial assets, and that's what I've spoken about in the book.
You just so rightly said that there's, India is one of the largest countries for data consumption. So, all the time, whenever I'm scrolling, I do find, cryptocurrency that's been spoken about. And I don't think too many people have an understanding of cryptocurrency and how it works. So, there is a dilemma as to whether one should invest in it at all or not. And of course, for me, I'm so conservative. I kind of don't understand this. And I'm sure there'll be a lot of people, where although a lot of information is available online, it is still very confusing. So, can you just demystify this concept of blockchain and cryptocurrency, for all the listeners? And we have a lot of young listeners actually, for podcasts.
I
Yeah.
wish I wish. I mean, I myself haven't understood exactly what blockchain and crypto is, and I've done so many episodes on my podcast on Pesa Pesa, where I've invited experts to talk about it and what it is, what it does, etc. See, Mova, here's the thing: the government has said very clearly that they are not in favor of crypto, and I think the government has done a very good job. So, crypto per se is unregulated in India, and it's very important for everybody to understand this. And regulated financial products, which is stuff like stock markets and insurance and credit cards, there is an entire infrastructure of regulation out there to protect the end consumer. There are rules, regulations, forms, everything is there, and it's in black and white for everybody to know. The RBI and the government has said there is no such thing for cryptocurrency at all. Whatever crypto it is, Bitcoin, etc., etc. So whatever the end consumer, the investor chooses to do is something that he and only he is responsible for. So that is one thing that has to be very clear. And even the advisors who've been interviewed in my book, they've also said very clearly that SEBI has mandated that we cannot sell or have an opinion on unregulated products. So I think that is a blockchain, of course, is a technology that has uses in utility far beyond crypto itself. So that will happen on its own. But crypto as an investment, I'm I don't do it myself, and I'm not allowed to recommend any product because I'm not an RIA. But I would really, if I'm having a conversation with anybody, my simple answer to them is I don't know. And if you want to know more, then you'll probably have to go and learn something on this on yourself. I am personally, for my own money, not comfortable in investing in something that's unregulated and on something that the government also has a very strict opinion on.
Fantastic, because there's so many kids who probably just want to become overnight, wealthy, and all these things are such a lure for so many youngsters. So this is so fantastic for you to say this on my podcast. Now, according to the NCFA, the Financial Literacy and Inclusion Survey 2019, the overall financial literacy in India is measured at 27 percentage, while only 21 percentage of female respondents in the survey were financially literate. So, how do you view these stats, and what are the reasons for such low literacy rates? I mean, we all know that women really are not allowed too much of a say, in finance, but what would be your take for this?
I would have to look at past trends, but anecdotally, intuitively, my feeling is that this has actually improved from where it was, say, 10 years ago, 15 years ago, 20 years ago. So we are on the path of improving financial literacy. And I'm pretty sure that given the kind of effort the government is doing on this, I mean, they've got a mission, they've got budgets dedicated towards financial literacy. Today, even if you see something like a KBC, Kaun Banega Crorepati, that has an insert, an ad from RBI on awareness. So obviously, all this is financial literacy is a process that takes its own time. One step of it is obviously curriculum in schools. Hopefully that will come in, because I've had a lot of people tell me that they wish they knew this when they were in school, and how do I get my kids ready. So all that is a good thing, although I do wonder, because these days I don't know if you've had these conversations, but we want our kids to learn everything. We want them to learn coding. We want to learn, make them learn music instruments. And uske upar they've got their school studies. Now, where will these poor people have time to understand stock markets and credit cards and insurance? But, anyway, jokes apart, it's pretty obvious that awareness about financial products needs to be there as early as possible, and if parents have a much bigger role to play in that when it comes to their kids. So that's as far as the children are concerned. I'm sure that the government will figure this out as part of curriculum. Most of what we know about money is learned throughout our lifetimes when we use it, and typically when we land up making mistakes about it. And hopefully now, with the financial awareness, with more people moving towards financial products, hopefully this awareness will come at an early age. I'm very, very optimistic about this, Mova. I'm pretty sure that as time goes by, we'll become more financially literate.
I'm also an extremely optimistic person, Anupam. That's the reason I've rebooted, and my entire endeavor has been, towards bringing awareness for a lot of subjects, and especially someone like you, where, a topic that's so close to my heart, like for the figures that show there are countless women, especially in tier 2 and tier 3 cities, who are dependent on their male counterparts. And not just tier 2 and tier 3, I mean, across India, I mean, where we are very dependent for all the financial decision making. Generally, even when banks go in or property is bought or any sort of financial decision is taken, um, women are not included. So, in your book, you delve into personal finance and equity investments. So, what advice would you like to share with women who want to understand the basic financial products in detail? Because women really need a lot of help when it comes to financial decisions. Because I think somewhere with all the pressure around her, she also does not make that attempt to want to take independent decisions because society around her home around her, people around her are not doing these things. So I would really like to know from you, Anupam, what is it that you would like to tell
What
our
a
women
fantastic
listeners?
question. What an absolutely fantastic and critical, it's an imperative question that you've touched on, Mo. And I really hope that, this conversation can help women out there. In my book, as I've tried to do whatever I could do, which I know is not much, but there are two women financial advisors who've given such great perspectives about how finance for women is fundamentally different. And I remember on my podcast also long ago, I had Hansi Mehrotra, who's a very well known influencer on LinkedIn when it comes to women and finance. And she spoke about how even when it comes to something as basic as staying in a city, like if a woman comes to stay in a city like Bombay, she has to choose an area which is safer for her. And those don't come cheap. So imagine that your rent increases just because you want to stay in a safe area. Something that men certainly don't have to face. I mean, I think it's called a pink tax. And there's a lot of studies on how finance and money are fundamentally different for women. And to answer your question, remember what both the advisors in my book told me, that when it comes to them advising their clients, they now insist that that spouses, wives accompany husbands. So, and they take a stand for that. That when a male customer comes and client comes to them and they're preparing a financial plan for them, they insist that they bring the spouse along so that they can understand family goals. They insist on talking with the wife, with the woman, to understand where they are coming from, what are their needs. A lot of these planners also have divorced women, widowed women, single women, and who are their clients. So the awareness is there. Obviously, this is in the slightly higher bracket of wealth because that's the target audience for the RIAs. When it comes to individuals, honestly, the great part is that there is so many resources out there for you to choose from. I've spoken about this in my book also. There are groups on Facebook like Asan Ideas for Wealth. You just join the group, ask whatever you want, and there'll be a wealth of people, a whole range of people there willing to give you advice. Obviously, this is free advice. So the responsibility is on the consumer, on the woman, to actually learn it in that way. So if you are um, someone who prefers to go online to learn, there are YouTube videos, there is so much material everywhere for you to do. Then there is, the government also has a lot of financial literacy courses on their own government website. So you can learn in this manner if you want to really start off. So obviously this requires a lot of effort, but that's how things are. That's, you would rather learn things from there rather than learn from your mistakes. So I think that is one way for women to um to learn, is that if you're married, then engage your partner. Both of you should be making decisions for the family as a whole rather than individuals. If you're single, you're young, then I think talking to your friends, talking to your family, going online is a good way for you to learn more about money and finance.
How fantastic is this? This is so amazing because there are so many people who are really struggling, and eventually they have nowhere to turn back, turn around and get advice from. So, thank you so much for taking out this time to explain this. Now let's just go to this whole thing about the stock market. I'm myself extremely frightened about it. I kind of don't understand the bull and the bear and the rest of it. So the stock market is another thing which is really not easily understood by the masses. Okay, now would you please explain to our listeners how the stock market actually works and how do you view it as an investment option?
Come on, Mawar. It's the stock. Just focus on the market part and you'll understand everything. If you've ever gone to a market to buy vegetables, groceries, anything at all, that's the stock market is just one place. I mean, you'd go to buy potatoes, tomatoes, apples, watermelons. On one day the price is this, on the other day the price is that. That's basically the stock market. You've got shares, which is a commodity. There you would have onions. Here you've got stocks of all kinds of companies, and you can buy them, you can sell them. That's just in one line. Now the question, I guess, which you want is, why do prices go up and down each and every day, sometimes in such a great manner? Honestly, there's no answer for that. The best way to understand stock markets is to learn about it. That a stock is ownership in a company. So if you want to buy one share of Reliance, you have to open a brokerage account. You also need to have a demat account, and you need to have a bank account. That's one, two, three. All of this can, it just takes maybe 5 minutes or 10 minutes if you've got your basic regulations ready. Boom, that's it. Of course, the bigger decision, the complication, I would say, is to understand how to invest in stock markets. And India is a very young stock market, and the past data seems to suggest that the longer you hold your investments for, the lower the risk of losing your money. Because really, the stock markets are very different from an FD, right? A fixed deposit is just so much easier to understand. You put in money, you get out money, you get an interest rate. That's it. You're sleeping absolutely fine. Stocks and shares are different. There are concepts of risk, return, liquidity, taxation. This is what I've written in the book, that it's might be a good idea for you to understand how this works. So that is the first thing. The second thing is, how do you want to invest? Do you want to go for a mutual fund, or do you want to buy stocks on your own? Both are perfectly valid, but it depends on the kind of time that you've got. So again, that's something that I've written in the book, that if you're someone who doesn't have time, who wants to just have a basic investment strategy, then it's great for you to start with an actual financial plan. You're 25 years old, you've just got your first job, or you're 35, you want to buy a house. So the stock market is just one part of your overall finances. So A, have a financial plan. B, choose products that you can understand. Stuff like index funds, where anything that happens in the Sensex and Nifty, that that's what's happening in your portfolio. That's it. So those are the two things that I think should help you to start off. And once you become interested, and one of the biggest ways in people are getting interested in the stock markets is what's called the systematic investment plan. There are 5.5 crore SIP accounts. Some of them, of course, could be duplicates also, which are investing 12,000 crores per month into the Indian stock market. And these are huge numbers. Again, you know, one of the basic thing that I've heard a lot of planners, advisors talk about is having a simple, small, 500 rupee SIP into an index fund. Something that you can understand and you can stay committed to. See, those are the two things that you need to know about the stock market, Moa. A, you need to understand what it is, and B, you need to be committed to it. Because, like I said, the longer you stay, the lower your chances of losing money. So I think that's my 5 minute take. I can go on and on, but this again should be part of your financial literacy. That first you need to understand how stock markets work, how stock prices work, and once you do that, then you need to take a call on what's the kind of risk you're willing to accept, and then last is the kind of commitment you make to the market. So I hope I've explained myself there.
Yes, you have. Now, you know what? There's one, I think, what will be fantastic for someone like you to talk to our women listeners, on this podcast, because sometimes, the parents would have only done, they've given them a financial stability with like how we began our conversation about real estate and gold. And the minute, for a girl, if she wants to invest in stocks and shares, she's obviously always going to be discouraged by her parents, because parents of that generation may not be able to understand exactly what the financial world is today changing into. What would you like to tell uh, a woman right now listening to us on this
Well,
podcast?
the first thing, and that's in fact the entire point of my book, is be your own financial planner. First, have a plan, please. First get your basics right, which is stuff like an emergency corpus, health insurance, all of that. So first is always to start with a plan, that who am I, where am I, what are my goals, and what am I doing this for. Now, assuming that you've answered all those questions, and you've also answered things like, what is the kind of risk I'm willing to take, what are the returns I'm expecting, all of that, if you've done all your basics into place, then then to convince your parents is, I think, that's going to be more of an emotional job than a rational job. The government at least has been doing this mutual fund sahiye campaign now for such a long time. Anybody watching the IPL would have seen that. But I think from a woman's perspective, um when it comes to investing, especially in mutual funds, I think I would definitely say that an SIP over a long term is a great starting point for you. And if you can commit, like I said in the previous answer, a small amount, and I think that might make sense. Now, it's going to be a little bit difficult to convince your parent who believes in real estate versus mutual fund. I think one of the most effective ways I've learned is that real estate is illiquid. It requires a large investment. So as an investment, well, that could work as a great goal for you. Let's say that you're 25 and over the next 10 years you plan to buy your own house. Then the stock market or mutual funds and all that could be one of the ways you consider to build up that wealth to buy a house after 10 years. And maybe that's one way you could use to talk to your parents that, listen, if you think real estate is good and if you think that I should buy my house and I need resources to do that. Homes are expensive, homes will always be expensive. So I think there is somewhere in the middle where we can achieve a lot by talking to our parents rather than having this financial versus physical kind of fight and old generation and new generation. Because honestly, even financial assets have risk. There's a perception that real estate is not risky because nobody's heard of prices going down. Unfortunately, real estate prices do go down. They really, in a lot of places for the last 10 years where I stay, for example, here in Bombay, they've not moved for 10 years. So that's in real terms you're probably losing out because inflation has been going up. So a lot depends upon your attitude, your approach towards these assets. If I'm someone who's going to convince my parents, then I think one way would be to use this by saying that here is something that's liquid, that's easy to understand, where I do not have to commit a very large amount upfront, and that's why financial assets or a mutual fund makes better sense to me. I hope that makes sense.
Yes. So for our women listeners, it's not roti kapra makan, it is paisa vaisa. And so all of you who want to become rich, please look into the book that Anupam has written. Read it nicely. The book is called The Wisest Owl, which will help general business readers, including students and homemakers. Very, very important because homemakers feel very, very left out in this entire process. It is to offer them a framework that they can use to create wealth in the long run. This book includes interviews with India's top wealth managers and personal finance experts. So, thank you so much, Anupam, for being on today's podcast.
Oh, thank you so much, Mo, for having me here. It's such an it is really nice of you to have me here, and I hope that listeners have some useful takeaways from this episode. Thank you so much.
Thank you so much for being on today's podcast. And just, a little metaphor about the wisest owl. The wisest owl is exceptionally wise, discerning, and very sound in judgment. The owl was once a symbol of Athena, the Greek goddess of wisdom, and has endured as a symbol of wisdom throughout the ages. She's considered as wise as an owl and has become something of a matriarch within the community. So, for all our homemakers, all the girls whose parents are homemakers, whose mothers are homemakers, please go pick up this book and help her learn how to manage her own finances. Thank you, Anupam, again, and look forward to seeing you in Bangalore.
Thank you, Mo.
To you, our dearest listeners, you can find us on your favorite streaming services, Spotify, Amazon Music, Apple Podcast, and of course on all other major streaming services. With loads of love, we are The Mahua Show, where we talk ईमानदारी से.